In this video, we are going to talk about low resistance liquidity. I decided to record this video because, first of all, I had no idea what I wanted to record. So I sat down and I thought about it. I thought to myself, what liquidity do I actually use the most? Is it old highs, old lows, equal highs? But low resistance liquidity was the liquidity that came to mind. It is, in my opinion, the most sort of seeked liquidity by smart money, and it is very important to understand if you are an ICT trader. So before we jump onto TradingView, I will quickly go over a drawn example. Okay, so essentially what we are looking for when talking about low resistance liquidity is failure swings. Right here, we failed to swing above this high, right? We never took out this high. This is a failure swing. And the same as this one. This one did not break this high, and this one did not break that high. And what does that leave us with? It leaves us with liquidity. So because this high didn't take out this one, and this high did not take out this one, there is liquidity resting above each of these highs. And that is the liquidity that we want to look for. How people would normally draw this would be like this, sort of a trend line. You could also call this trend line liquidity. And this is something that price seeks a lot, or smart money wants to accumulate. And the reason behind this is because price engineered buy side liquidity here for a reason, and that is to trap retail traders. Because not only did people place a lot of stop losses above these highs going short, but they also put their sell limits at this trend line, right? There's a lot of retail traders that are going to go short once we hit this trend line again, anticipating lower prices and anticipating that this trend line acts as resistance. So they place their sell limits here, and what does smart money do? It goes up, activates those sell limits, right? And with sell limits come stop losses, which typically rest above these highs. So not only are we stopping out people that went short here and here and here, we are also activating and stopping out the sell limits from the trend line. And that is essentially why this liquidity is often seeked more than, you know, random highs and lows. Just like equal lows and equal highs are important liquidity points, so is low resistance liquidity. And you could also use it for your daily bias. So we'll now jump onto TradingView and go over some examples there. Here we have a great example on the NASDAQ. We have a high here, we have a high here, and we have highs here, and another one made here. And what do all these highs have in common? They are all failure swings to the upside, right? This high did not take out this one, not this one, this one, not this one, and this one, not this one, right? So we would classify this as low resistance liquidity. Again, we as smart money traders are anticipating that this is going to get taken out. Retail traders, however, are going to go short here because they think this is a trend line retest. And this is exactly why this liquidity is so important. We have stacked all the stop losses of the people going short on these swings, and at the same time we are activating the sell limits on this trend line. But how do we identify that we are actually going to go for that trend line liquidity and not just create more buy side and take out the trend line liquidity later? Well, what I like to look for is a violation of the opposite PD array. Okay, so in this case we have buy side low resistance liquidity. Now what do I want to see? I want to see us violate bearish PD arrays, right? So we have this gap here, this small bearish fair value gap that I would want to see get inversed, which it does right here. At the same time, we are failing to swing below the low. As you can see previously, we did swing below the low. You want to see a failure swing to the downside in this case, and a violation of the opposite PD array, which in this case is bearish PD arrays. This is of course followed with some sort of bullish displacement. So what I personally would do is look to trade probably this order block here, or I would trade this inversion fair value gap, doesn't really matter. In this case, we are going to go for this order block, stop below the low here, and target the end of the trend line liquidity or low resistance liquidity. Let's play it out and see what happens. There we go. We get tapped in and we hit the end of the low resistance liquidity. All I want you to understand from this is why we are going for this low resistance liquidity and how you identify that we are actually going to go for that liquidity and not just engineer more buy side. So again, look for failure swings like this one, displacement, and a violation of the opposite PD array, which in this case is bearish PD arrays. So here we have a great example again with sell side low resistance liquidity. We have these lows here forming a nice trend line from a retail perspective. This low is also open, right? All failure swings, engineering more sell side liquidity for us to take. Now we did close below this volume imbalance and this bullish gap previously. So now I would want to see us go a bit further down, preferably below this low, creating a breaker block to give me the confirmation that I need to be confident that we are going to go for that sell side liquidity or low resistance liquidity or trend line liquidity. There we go. Now I have a breaker block or a market structure shift. And so I would place my short here, stop above this obvious swing high and target the end of that trend line or low resistance liquidity. We get filled right here. Let's play it out. And that is a beautiful trade. And again, what more confirmation could I add other than a market structure shift? Well, at the same time, we are also holding this bearish gap. Now, typically, if we are in bearish order flow, we are going to hold bearish gaps. And if we are in bullish order flow, we're going to hold bullish gaps. And given that we violated this bullish volume imbalance and violated this bullish fair value gap while holding this bearish gap and this bigger bearish gap, I am now confident enough that we are going to go to that trend line or low resistance liquidity. Here's another example. This will be the last one. We have a high here and we have a high here, right? We can draw a trend line, but before I am confident enough that we're going to go take out these two highs, what do I want to see? Well, I'd like to see this gap get violated and also this one, right? So let's see what happens. Let's see if we can close above this high. Okay, see, now this is perfect. Why is this perfect? Because we closed above this bearish gap while we are holding this bullish gap. And what did I tell you? When we start violating bearish gaps and holding bullish ones, we can therefore assume that order flow is now bullish. So this will make me confident that we're going to go take out that trend line liquidity. So we have a fair value gap right here, which is something that I would probably take. Now stop below here, target the high, and let's see how it goes. And there was a bit of a longer trade, but again, we have those highs with buy side liquidity resting above it. We have that bearish gap that got violated. We actually had two bearish gaps that got violated, and then we had a bullish one that was holding. Now I can comfortably expect the next bullish gap to also hold and overall anticipate that we are going to go for these two highs. That was all I have for you in this video. I hope you enjoyed and I hope you learned a thing or two. Low resistance liquidity or trendline liquidity, whatever you want to call it, is some of my favorite liquidity to trade because in my opinion, that is the liquidity that makes the most sense to me. It really makes sense to me why price would be hunting that liquidity over other liquidity. And some of my highest probability trades are combined with low resistance liquidity. And so I thought I would share how I use it and how I view it with you. So if you enjoyed this video, make sure to like and subscribe. If you didn't, let me know in the comment section below why. And I will see you in my next video. Bye-bye. Also, if you heard any meowing, it's this little guy. He likes to talk a lot, so I apologize for that.